following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Dow Industrial's up 239 right now. Nasdaq up 78. S&P's up 20. Dow Industrial's down 242. Nasdaq down 79. S&P's down 26. Gold contract up $23, trading at $15.51 an ounce. We have silver up 11 cents, $18.16 an ounce. Light sweet crude, big bid on light sweet crude. Light sweet crude right now is up $2.31, trading at $63.50. Notes and bonds. Bottom line, notes and bonds continue to higher price, lower yield. You have the 10-year up 16 ticks, 129.04. The 30-year up a full point plus one tick at 157.20. King dollar up 62 ticks, trading 96.906. Euro is at 111. Yen is at 108.15, and the pound is at 130 to 1 U.S. dollar. And folks, as you come over to our website at TFNN, each and every day, Tom does an update, and he's been doing this for about a month right now, and there's no doubt that there's plenty of news out there this morning. Just go to TFNN. You're going to see the morning market report. You got an afternoon report. Tom O'Brien, what's going on?
Good morning. Not a slow day in the markets today, that's for sure, man.
Not a slow day. In the middle of the night last night, folks, you had an airstrike that basically took out Iranian's top military leader. That took the futures south in a huge way. And what's going to be so intriguing, if you heard my update, man, my take is that we're going to test these highs again. And I know it's deviant, but I can tell you the way that the NASDAQ basically went higher yesterday, markets don't finish on a high volume high. So
yeah, just touching on it. So it started to come across. I think I saw it maybe at 9 or 10 o'clock at night. I got a notification. And, you get a lot of notifications these days because we've been in the Middle East for so long that somebody may have been killed, right? Something unfortunate may have happened. Hopefully it's not U.S. troops, but you do get a lot. And the first notifications were trying to emphasize who this person was and how big of a deal it may be, right? And it's just remarkable. So I did the 9 o'clock update this morning, and I'm flying around different sites trying to figure out what's going on in the morning, right? I have Bloomberg on. I'm listening to TFNN. I was listening to your show a little bit last night. I was going on CNBC. And on CNBC this morning, and I touched on the 9 a.m. update, every single headline, there were 8 headlines, all had to do with that Iranian general getting taken out. And I don't think I've ever seen something where 8 headlines that encompass the entire top of the front page, all having to do with that story.
Yes.
It was kind of just, and one was an op-ed, one had to do with oil, one had to do with Democrats responding, one had to do with Trump's tweets, one had to do with just the general futures reacting, and one had to do, I think, with Iran vowing to retaliate. I mean, it was just a plethora of articles. And the more I read about it, we'll see what happens, man. But the VIX relatively muted this morning with everything going on, and the S&P is already almost a full % off of the bottom that it made of, I think the S&P is the low 3206, and we're sitting at almost 3236. So quite a pop off of those lows, man.
There's no doubt. And watch this, folks. I'm going to pull this up, and when you take a look at this. So this is, I'm just pulling up the futures market, the S&Ps. What you're going to see here, the low that was established at 10 minutes of 6 this morning at 3206. You basically got up to ICE, okay? So ICE is where the breakdown occurred in the middle of the night last night. The futures had already been down the first leg when it came out, and then it basically went down another leg. That being said, what you're going to see is that, right at the open this morning, bottom line, they bought this dip in a big way. The futures went from, they went up 15 points in a 10-minute span, okay? So, hey, we'll see where this shakes out, but I do expect we're going to test the highs. And why, just like I said this morning, is that if we take a look at the Qs, what you're going to see here yesterday is that, look at that volume, man. I mean, the high of the Qs was 216.16. Monster volume, and what I've found is that they like to get tested. And what you're hearing off me, too, folks, is that this is how deviant markets are. I mean, it's just, you know, when you wake up and, you know, you're down 40, 45 S&P points, you're down, you know, prior to this, like 350 Dow points. Well, bottom line is that the market loves to go up, test them, and then, okay, then you have a whole different ballgame. But we'll see where this shakes out. You know, gold, of course, caught a bid. And what I expect we're going to see, because it's a Friday, I don't expect this to basically back down. You know, we have a whole weekend here to see where this is going to go. Yeah. And, you know, we're already at 309,000 contracts. Gold, to me, wanted to test the 1571 anyway. That's the swing high. You know, so we'll see where this baby shakes out, man. But now, Tom, we got to go to Tesla.
I know, right?
Oh, man. Folks, this move here, so picture this. Tesla came out, the news was, what, 116,000 cars or something?
Yeah, maybe 114.
114, okay.
112, there we go.
112, okay. So they come out with 112,000 cars in the quarter. Now, this is a confirmed ABC structure on the way up. This is already blown away at swing point.
Amazing.
Exactly. So we need 9.9 million shares here for confirmed ABC. It's 10 o'clock in the morning, and you got 7.1. Now, listen to this, folks. This is where this gets wild. Your B point on this is 435. Your A is 327. So you're talking about approximately $108. And your C is 402. So that's 510, a projection of 510. Now, that seems far-fetched, okay? But guess what? You still have a 20% short interest in Tesla. 19.34 as of this morning. Pretty intense, man, right? Now,
who is in that?
Hey, Tom, if you thought yesterday we were bringing up the market cap of Tesla, look what happened today. 80 billion, right? Yeah,
you got
80
it, man.
billion.
Man, I think we pulled up Ford yesterday because Kevin Hinks is there talking about on TD Ameritrade. I think Ford was 36 billion.
There it is.
36.
36 billion, yeah.
Boy, oh boy.
36 billion to 80 billion. Pretty amazing, man.
Yeah.
Absolutely amazing. Let's go take a look at some of the higher volume equities out here and see what we have. You get Advanced Micro, that hit a new high yesterday. That was up like 4%. That's down 65 cents. No big deal there. Tesla's the big one, up $16. You get American Airlines down $1.39. Nothing heavy there. Inside the NDX 100. The NDX 100, folks, yesterday was the mover in an extraordinary way. Today, you got Tesla putting 3.8% into it. You got XL Energy putting 0.4%. Taken away from it, you get a little hit here. Insight Corporation that is down 9.6%. You got American Airlines off 4.8. United's off 3.8. They're worried about the airlines. Interesting, man. Let me see this for a second. So 3.4. Yeah, I guess the market's worried about the airlines. That headline there says, let's see. Oh, oil prices, of course. Yeah, no, they're the oil prices, right? Yeah, oil prices up, airlines.
Yep. That makes sense, man.
That totally makes sense.
Big time.
Stay right there, folks. Tommy and I are coming right back. Dow is down 216. Nasdaq's up 66. S&P's up 22. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us out here. We have the Dow down 211, NASDAQ off 61, S&P's off 22. So, Tom, we get oil at 11 today. So this is going to be quite a day for oil.
Oh, interesting. I wasn't even considering that, but yeah. These holiday weeks, man.
Right. And so what they're looking for here, let's see. So the whisper number is a drawdown of 5.2 million.
Yes.
Yeah. And the survey number is 3 million.
Yeah.
So now I'd love to see how this changed. Well, I guess it wouldn't change because it is what it is before this started here. If we go over to the oil contract and take a look at this contract, folks. Okay, so you got it up 230. You know, this isn't.
Go ahead.
This is really not that much because what we actually just did. This is going to be wild watching this shake out. What we just did is that we just tested the highs of the day that the Saudi oil fields got bombed, which was 63.38. We went to 64.09. Oh, yeah, but we're over that price. Yeah, we're over it. We're over it. It was 63.46. Okay, so let's see where we can go here. Let's see. This is going to get wild, man. I mean.
Yeah, and there might not be as big of a reaction when, you know, normally the inventories will have a huge effect on the price of oil. If we just started war with Iran, that is going to have a much bigger impact.
Yes. Yeah. So there's no doubt.
There might not be because, you know, that jump last night went from about $61. So it looks like the news started maybe at about 8 p.m. Eastern time because I see the rise. And we were at $61.16. And by 9:30, we were at 63.81.
Yeah.
Still be interesting for sure because if there's a surprise or something, we can break it down. But let's just see. So let's see where we are. So I got the contract up there, crude February. We're trading at 63.42 right now.
Yeah.
Let's refresh these contracts since I had it up early. We'll go into the commodity call spreads, crude oil. Now this is where I wonder if things are going to be. Let's see where the noons line up.
Oh, right, because that's right, because they may have been.
Well, what happened is we got such a move last night, actually, that we're sitting kind of where we were after the huge run up to 9:30. So the dailies might not be appropriate, but excuse me. 63.50 we do have. Let's look at the noons.
Okay.
So we have 63.50. We're right next to that number at 63.44. We'll look at the noons. We get the inventory number at 11 a.m. And on the bullish side, we're going to be paying about $25 because you're buying it at 63.75. The contract's trading at 63.44, so you're slightly out of the money. And on the bearish side, going from 63.50 down to 62, we're going to be paying a little bit more money because we have about now 8 pennies of intrinsic value. So you're paying 32, you're paying $57 for an hour of exposure from 11 a.m. till noon. And that seems a little bit more pricey than normal.
Yeah, yeah.
But nothing too crazy. And it's probably because, you know, it's funny that it seems a little bit more expensive than normal, but it's probably just because you're pricing in defined risk on a day that you have such an escalation in the Middle East.
Yes.
More than it is that you're pricing in defined risk with the inventory number dropping at 11 a.m. with exposure till noon.
Yeah.
So any type of oil optionality product today that you're locking in defined risk, I mean, just think of if you're going to be the other person on the other side of that, right? If you're going to be the person selling this contract, you better make sure you're collecting some premium because there could be an escalation of a retaliation, another strike by the U.S. in between 11 a.m. and noon. That's something I think that probably is more priced into these products right now than the inventory number at 11 a.m. So not a bad contract, not a bad trade because you're right. You're buying volatility. You have availability in terms of you have exposure from 63.50 in either direction, and you're paying about $57. So you need about 57 cents in either direction by noon. That's not a bad trade, an hour and 35 minutes with the way that oil's been trading this morning.
No, there's no doubt. And I suspect, you know, one of the reasons that even gold and oil will stay up, folks, is that going to the chase, if something's going to happen on the other side, if they're going to do something, they're going to go after the Strait of Hormuz. Because that's basically where all the oil goes through. Do you know what I mean?
Yeah.
And, you know, we'll see where this shakes out. Because the bottom line, what's not intriguing would be the wrong word for this. I don't think there's not too many folks, you know, outside of maybe a lot of folks in Iran that are feeling sorry for this guy getting smoked, because the bottom line is he's killed so many different people in so many different countries. I mean, he has so many
he's a
militias.
very bad man.
He has so many militias, it's insane, folks, okay?
He's a very bad man.
I don't care whether you go to Syria, you go to Iraq, you go to Yemen, you go to Lebanon, you go to Israel, you go to the United States. I mean, it's all out there. Now, that being said, the bottom line is that, you know, now you're in a different type of conflict. But
exactly.
And that's why oil responded like that, because that if you go look in the Google and just bring that map up, you're going to see, and I think we did this, Tommy, about 8 or 9 months ago when it happened. The Strait of Hormuz is really small. I mean, when those tankers go through there, that is a very small part that those tankers go through. So that's what we're looking at out here. The Apple yesterday, you know, even if we get off the air, Tommy, I mean, that thing just kept going. And listen,
I know.
And look,
it made it above 300 before the futures traded lower. And where is it now? 298. All right, it made it to 301.19.
And it made it to $300.57 already this morning. It's not going to give it up. It's like, I know. That's a wow. There's no doubt.
Sure is.
The Microsoft also hit a new all-time high. Microsoft yesterday, look at this thing. You know, it's only down $1.14. See, this NASDAQ wants to touch these highs. 160.73 yesterday. You know, big number. And this is also, this is a larger ABC up. Interesting, man. Look at this. So we took out, on December 20th, we took out the B point. So that B point was 155.90. Let's call it 156. 10 points. Well, I'll get you 163. 163, and we hit 160 already, you know. So we're talking those NASDAQ technology stocks, basically, it doesn't look to me like that they're done just yet. You know, and the way the chips were trading yesterday, folks, I was figuring that they're going to put a chip like in every one of us or something, man, because, I mean, it's AMD. Look at this move by AMD yesterday. And look at this. It shook it off today. So AMD on Tuesday closed at $44.92. It hit $49 yesterday.
Yeah.
And it's at $48.27 right now. I mean,
and before, I was just gonna say, before the whole Iranian deal, it was at $49.79, man. It was probably climbing for $50 if that strike didn't happen overnight.
right. And this also is another ABC up. So we'll see whether it can, get the performance going. But it's pretty intense because 47.31's your. It's like $9. Let's say an $8 one. That's 52. Oh, it's almost at it. Interesting. Yeah, 49.19. 52 would have been the number, but. Stay right there, folks. Tommy and I are coming right back. We're going to go up to Massachusetts, and then we're going to talk to Mark. We have the Dow Industrials right now down 222, Nasdaq off 66, S&P's off 23, gold's up 24 bucks, silver's up 13 cents. Notes and bonds continue higher. King dollar just went negative. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And, Tom, we were talking about Tesla, talking about the aspect of their market cap versus Ford. And so GM, if we take a look at GM, that's down $1 right now. But look at this. This is so GM, their deliveries, I guess the estimate was down -6% anyway. Okay, so I guess they were looking for that. The fourth quarter total deliveries down 6.3%. The estimate was 6%, so that's not the end of the world.
No, but when the market's giving you credit for just being down 6%, you can't even reach that measly expectation, and you're down more than that, right?
Yeah.
That's a tough deal, man. And those car companies, they continue to struggle, and Tesla continues to shine.
I know, man. It's like it's all about growth, right? I mean, that's the bottom line. There's no doubt.
And how about L Brands, right? You see that I sent over? So they got an upgrade today, and they're up like 5+%. They've struggled a bit. Well, let me tell you, man, I was around, whether it was a Victoria's Secret store, and what else do they have in there?
Body Works, right?
Bath and Body Works,
Yeah,
yes. I was in there as well on Black Friday.
You were talking about that, yeah,
Some
right.
great sales. And, I found myself saying, okay, they're struggling, right, for sure.
Yes.
But what you want to always ask yourself in the face of this retail sector, right, is this a company that has a brand that can succeed?
Right.
And boy, oh boy, I don't see Victoria's Secret going away anytime soon. And Bath and Body Works, man, they were just crushing it on Good Friday. Some great sales, buy one, get one. Some of those candles they had, I think they're $26. They're down to like 13. And then they had a deal at checkout. You could get kind of a whole bag of stuff. If you spent $100 in there, you got the bag for $50. The bag had $150 worth of stuff. It was just the type of deal where they were packaging sales in a way that I thought made a lot of sense. And so maybe you see that boy, oh boy, that chart, as I kind of struggle to finish my sentence saying maybe this is an opportunity where they've reached their bottom, but maybe it is. I mean, you're talking about going almost from 100 to 18. You open the day and then 17 and change. If they're going to be around, man, and Victoria's Secret's going to be around, that's for sure. And
there's a great article yesterday, folks, in the Journal, and this is what it's about. This is great. What we're talking about this, okay? So this article is about Fredericks of Hollywood. If you don't know who Fredericks of Hollywood is, right? That was the most deviant, underwear place for women, basically. Okay.
It's more risque lingerie, I would say.
So they went bankrupt, and Authentic Brands bought it. Now, Authentic Brands, folks, owns they own all the brands we know. Okay, and what the article was about is that they took this and they changed the whole dynamic of it, right? And they still, basically had it sexual to a certain point, but they're going after the large masses, and they've changed everything. They've changed the whole deal. And it's going to be, when I was reading that, I was thinking about Victoria's Secrets, because the bottom line is it just has to calm it down a bit, I think. Do you know what I'm saying? In this day and age, and how they're going to do it. Because if Fredericks of Hollywood could do it, that's what I was thinking. I was like, hey, man, if Fredericks of Hollywood could stay alive, guess what? Victoria's Secrets should be able to bloom on a different platform and going after, a little bit less of the, shows and the whole bit. But the bottom line is that it's out there. You know what I mean? So, yeah.
I would agree, man. So they're up almost like 6% today, man. That's a big move in a stock that's been struggling. And I mean, I hadn't seen that chart in a while. I pulled it up when I saw the upgrade.
Right.
But boy, oh boy, I can't believe they're at almost $100.
And they still make money. They
make money, man.
They take in $13 billion. They make $2.42.
Look at that growth in Bath and Body Works too, man. Yeah. Almost 9% growth on $4 billion. And that's in the face of, that's the one I not worry about more, right? But Bath and Body Works doesn't seem like a brand that is, irreplaceable.
No, I'm with you. And there's a high, the profit is huge in that, folks. That's the other side of it. I mean, you're talking about bath waters with colors in them, right?
Oh, right. I know. And candles for $28 and all that good stuff. Right, for sure. I know.
Let's go to Mark in Bedford. Hey, Mark, what's going on?
Hey, listen, I bought on New Year's Eve gold, the GLD options, the 141s, and I paid $3 each, and I got a couple hundred of them, and I'm trying to figure out what to do.
Sell them.
To the January 31st.
That's all right. Sell them. You get a pop.
Sell them all.
You get a pop like this. Yeah, I'd sell them all. You get a pop like this. The bottom line is that there's going to be more premium in those today too. So you have two different things end up happening. You're in the money good, and what ends up happening is the premium inside the option market today, inside the gold market in particular, is higher than it normally would be, because what's going on, it's moving around quite a bit. So the market makers themselves are saying, okay, man, I need more premium in these, because what does happen, of course, in the gold market, folks, you can be up $25, you can be down $25 in a heartbeat. I'd sell them, you know.
What would you sell them at? Because they're at like $5.50.
So let me pull them up right now. Okay, so we got, give me the strike price again.
141.
Okay, so you
January 31 call.
You get the January 31s. On the GLD?
Yeah.
Okay, okay. One second, why is this coming up for me? Oh, I'm in, 1 second, January.
I can try and pull it up on mine as
Yeah,
well.
I got to bring up more strike prices.
Contracts, right?
That's what's going on. What happened here is that you're so in the money that let me see how we do.
Yeah, they won't show it on my computer either.
Right, exactly. Okay, so tell me what the bid and offer is right now.
Okay, I can't see it because I'm not looking
Tommy,
at
can
it.
you pull them up?
I'm trying to get there. I am, and I will. Just
Okay,
give me
cool.
a moment.
No hurry. Okay, so.
If you look at my screen, I got it up now. So
Okay,
let's see.
cool.
We're calls 131. They're trading about $15.10. 15.10 by 15.20.
130.
Okay, I got 141. I'm not.
Oh, 141. I got it. Okay, so. Okay.
I heard 131 too. Okay, so 5.20 by 5.30.
Okay, so I have an order in to sell them at 550. What do you think?
I'd bring it down, man. What was the high of, Tommy? Do you have the high of the day there? What does it say? 'Cause you just got the spike. See, we just got the spike up to 146.02.
The high of the day is what it says it's trading at right now for me, 146.07.
Yeah, no, I mean for the option.
I don't have that in front of me.
So tell me the bid and offer again. I'd bring it down, Mark. I'd move those out, man. This is a big score, man. You know, when you're talking about it, the gold market, you know, does spike $20, but you got the spike, man. I mean, sometimes you could wait weeks for that. You know what I'm saying? And if something happens over the weekend, you get it more.
3 days.
I'd take the bread, because there's going to be plenty of other people that are basically buying at this point, and you know, you want to be a seller, man.
All right, thank you, Tom.
Have a great one, man. Have
Thanks,
a safe
Mark.
one. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 220, NASDAQ off 62, S&P's off 21. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 199, Nasdaq is up 54, S&Ps are off 19. It's kind of hard to comprehend, Tom, right? That the S&P is only down 19, right?
I know, because they traded down 60 points from high to low on that news right away last night.
Yep. And as we were beginning the show, folks, my take is that we're going to test this thing, and it's going to be really pretty amazing. If in fact this little baby gets up and tests the highs, what we just did, and we just did this just as Tommy and I came back out of a commercial break. We just took out the 32.39, which was the first leg up, and the longer that we stay over this, the bottom line, the higher the probability that guess what. Right, the highs would be going right after it again. That would be just an absolute mind blow, man. I mean, it's like, okay, you moved 60 S&P points. Well, we haven't done that yet, but if that's what it is, it's going to be like, you got to be kidding me, man. I mean, it's just pretty amazing. So let's go to Mark in Fort Collins. Hey, Mark, what's going on, brother?
Not too much, guys. Happy New Year.
Happy New Year to you, Mark. Man. How you been?
I've been all right. I haven't talked to you guys for a while.
It's good to hear that voice. Totally, man. Yeah. So
what's up with natural gas? It's going down while everything else is going up.
Oh, natural gas. Don't you know how much natural gas Tommy and I have in our backyards? We just keep pumping it out, man.
Based on everything I ate, I'm pumping out a lot myself.
Oh, that's awesome. So let's go take a look at this contract. We were talking about this a couple of days ago, Mark, that what's happening is that they had this a couple articles in the journal, and what it is, there's so much natural gas in the shale fields that no matter how much or how cold it gets, we have natural gas like beyond belief. And you can see this is what this is doing right now is hammering the bottom, and it's looking to me like, man, natural gas is on its way down to the $2 level, and it's just because the supply is so huge. If you look, the thing that's pretty amazing is that I was always trying to figure out why, we've talked about this too, that we have oil, that's been hanging out the $50 to $5 level, right? And it's like, okay, why are these service companies as well as some of these shale producers getting killed? Well, what happened, folks, is that when the shale, let's see, 5 years ago, no, actually 2019, no, it's longer than that, okay? So it started in 2007. In 2007, when this thing really took off, what happened is that the shale producers raised huge amounts of money. I mean, Wall Street, Main Street would be giving them money hand over fist. Well, what's going on now is the reason those prices are so low is that now the bills are coming due. The first bills of those bonds that were pushed out there are coming due this year. So the market is expecting that a lot of those shale producers are not going to be able to basically pay the amount of debt that they have to pump the new oil out that we got. That being said, Mark, what that means, okay, is that, and this was what this article was about also, is that, so picture that Tommy, you and I are all shale producers, right? We owe a huge amount of money, and the only way that we can actually pay any of that money is no matter what the price of oil is, we got to keep pumping, okay, for cash flow. So the more that we pump, the more natural gas is there. And I think that's the bigger deal. You know what I'm saying? That, you know, it's a cash flow deal. You know, they know intuitively that, yes, if you pull back, the price may go higher and exponentially higher. They're, you know, $2.31 today. I mean, but I think that's what's happening, you know. And you've been around long enough, man. I mean, this natural gas thing has been happening for years now. And
yeah, I've been watching this. There's a company that has a building across the street from where I work in Denver, and it's called Antero. And I think there's an Antero Midstream and an Antero Resources. There's two different portions of that company, AR and AM.
Okay.
Their stocks have gone from, you know, 30 to and 20 respectively down to 2 and 6, and I'm wondering if they're just going to go belly up.
Well, here, I got it right here. This is cool. That's going to happen with some of them for sure. And it has to do, okay, so here, I got this low for the year. Look at this, man. It's $1.86. The high is $11.03. There you go.
Yeah, pull it back 5 years and look at it.
Yeah, no, and I was, you know, until I read that article yesterday, I was really just like, okay, so why is that happening, okay? You know, but guess what? I should have realized before that. It was just like, Tommy, remember when we used to bring up CEMEX, that they made a fortune, but their debt was like insane, folks, okay? So it's trading, that's what's going on with these companies, with these resource companies. I mean, watch this. If you look at the revenue looks cool, man. I mean, the revenue, $3.2 billion 2016, $4.2 billion next year. But then if you look at the losses, at $3.2 billion, they were making 71 cents. At $4.2 million, they're losing 12 cents.
Yeah, great point.
You know, so I just stay away from that natural gas market, man. I mean, it's pretty wild. So how's Denver? You guys are in action now. You got the winter here. You got all the snowbirds out there.
Yeah, there's lots of snow and good sports teams, and it's pretty good.
Good.
Yeah, can't complain. Except for the Broncos, of course.
Yeah. Hey, listen, we got to deal with the Patriots here, man. This is the first year. This is going to be pretty intense.
Yeah, they're always going to be all right.
Yeah, well, we'll see. Cooking, brother.
All right, take care.
Have a great one, man. Have a safe one. Yeah, so the oil business, it totally makes sense. I mean, the amount of debt that was out there, that is out there, not was out there, and it's coming due, folks. That's how this thing shakes out. And what will end up happening is that some of the producers that, you know, the market will be friendly to the meaning, because what they're going to try to do is they're going to try to refinance the debt. That's how this thing will shake out. But a lot of those producers are not going to be able to refinance the debt because of the fact that their cash flow isn't there, and the bondholders are going to be worried that the new bondholders, let's put it this way, would say that, no, I'm not going to give you anything, you know. And we'll see where that shakes out. You know, I suspect another 4 or 5 months from now, Tommy and I are going to be talking about that. You're going to see interest rate structures out there in that field of that, they give them some money, at 14, 15%, which always blows my mind. I can't understand how these companies can make money at that level, but some of them do. Some of them can break out of it, you know, because it's like you either go BK or you're gonna pay up for something that someone takes a much higher risk to pay off the rest of that debt, you know.
Yeah.
So we had a little surge out there. You're 227 coming into a Friday. I mean, this market, you know, even down 227, it almost looks like it's a sideways market.
Yeah, I mean, there was such a pop, man. We're right back to where we were. What, Monday?
Yeah. I mean, you know, the Dow, you know, when it was opened, okay, 28,500. We're 135 points over that right now, and just laying at where we were all last week. So stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 232, Nasdaq off 63, S&P's off 23. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 235, Nasdaq's up, down 66, S&Ps are off 23. And let's go take a look. So what we have out here, folks, at 2 today, we're going to have the Fed minutes from the December, I think, 11th to 12th, or 12th to 13th meeting.
Yes.
So it's going to be intriguing. And I put the Fed fund futures up, and this is the first time, I don't know if it was yesterday or a couple days ago, that we flipped once again that the potential of a Fed hike. But look at how small these numbers are. So January, 3.7%. The highest, that's the highest it goes. This changed again this morning. So it's going to be intriguing to see, the Fed governors themselves, folks, where they stand. Now, what we're also going to have is that I believe there's 2 new Fed governors that are voting this year. So there's a rotation that takes place inside the Federal Reserve. So we'll see whether that's going to move that market or not. It's certainly, going to give us an idea of where everyone stands, meaning, are they standing pat? Are they basically looking that, I can't picture them saying the rates are going to go down, but, hey, we'll see.
Hey, how about we finish up the program with the VIX? Because pretty remarkable, man. We got a spike to 1620. We're now at 1359. If you remember Monday and Tuesday, coming into New Year's Eve, the end of the year, we saw a little bit of a spike But we are now, right now, under where we finished New Year's Eve.
Look
and if
at
you
that.
remember, we got a big acceleration up to about 3,042, I think we finished the New Year's, maybe.
Yes.
And you're going to tell me that, you know, the U.S. airstriking the top commander for Iran, that there's less volatility priced into this S&P right now after, boy, oh boy, I don't know. We'll see how that plays out.
Shake it off, baby.
That's right,
It's like
man.
Dogs are getting clean. Shake it off. Stay right there, folks. We got Think of Swim coming up next. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.